how does an apartment syndication work? There are tons of moving parts to apartment syndications, but let's just look at it from the passive investor side of life, okay? So if you were looking to passively invest in an apartment syndication, the process looks a little like this. One, you need to know if you are an accredited or sophisticated investor. We already discussed that in some previous nutshell moments, so go back to one of those and check it out. If you're a sophisticated investor, it's imperative that you are on an email list with the operator. If you're not on that list, you're not going to know that they even have an offering available to you. So you want to make sure that you are on lots of email lists because there aren't a ton of offerings every single year. Oftentimes, an operator will have anywhere from 2 to 5 offerings throughout the year. And I would say maybe scale back onto that 2 to 3 side on average. So that's not very many opportunities throughout the year, and they might not align with, your goals. Additionally, a lot of these opportunities are fully subscribed right away. What I mean by fully subscribed is they only have so many slots for investors, right? And those slots can get filled very quickly. So you want to make sure that you are ready to take action. So step 1, know what kind of investor you are. I'm accredited or I'm a sophisticated investor. Step 2, you want to make sure that you know where your money is coming from. The worst thing that could possibly happen is that you don't fall in love with the deal, but you fall in love with the numbers. And those numbers point in all the directions that you want to take and grow your wealth. But regardless if you are accredited or sophisticated, you want to ensure that you have your funds or your money ready to take action. Sometimes people need to move funds around, from one account to another so that they can wire the money directly into the deal at the appropriate time. And there is a time where it'll be, okay, this is when your money must be wired in by this day and time. So you want to make sure that if you're converting money from self-directed IRA or 401k of some sort, if you are moving and shifting money around, that can take time, especially if it's an unfamiliar process for you. So you want to make sure that you are going through the process of having your funds ready so that you are ready to take action. Now, I encourage you, I think that I rolled money from a 401k months before I knew I was going to be actually making an investment. I didn't know what sort of hiccups I would come across. And although I was shifting the funds and maybe, for 3 to 6 months, I wasn't, getting returns on that money, I also had the confidence that when I came across the right opportunity, I was ready to take action. The first opportunity I invested in as a passive investor, it was oversubscribed and it was fully filled within, I think, 36 hours. So I am so happy that I was ready to take that action. So know what kind of investor you are, have your monies ready. Then highly encourage you, whichever operator you're working with, get a look at what their PPM, the private placement memorandum. You want to, just get a general idea of what that looks like. If this is important to you, you want to read through that in advance. You don't want to wait until the last minute and now you want to read through these documents, and you have questions. These PPMs are very similar from deal to deal. The differences are going to be that some of the nuances, the numbers, the holding, the returns, the projections, the distributions, like those are the moving parts, but the general legal terms and how most operators are structuring their deals is going to be very similar from one deal to the next. And so take time, read through that PPM so that you understand just a general feel, general terminology. You're asking questions in advance so that you are, again, really reaffirming that being a sophisticated investor, if that's what you are, and you're ready to take action the moment that you need to. Additionally, you want to ensure that you are placing yourself in positions where you are able to meet operators. Having that relationship is imperative. It's not just finding somebody online and joining their email list. As I said, that is really imperative to be on that investor email list. However, you are going to be a more confident investor if you have a relationship with different operators. Some great places to meet operators are meetup groups. A lot of people have in-person and virtual meetup groups. So that is a perk of the pandemic, is that a lot of meetup groups turn to an online platform. And so you're able to meet different operators from around the country, not just in the community that you live. So take time, get to know operators, because ultimately you are investing in the operator and more than you are investing in the specific deal. Because a deal could be like the best deal ever, but if you're investing with someone who might be shady, or they do things in a way that doesn't align with how you like to go about doing things, you're going to run into some conflicts that you don't want to have. Well, let's just say that an investor emailed you a deal and you absolutely love the deal. It looks good, the numbers look good. They're more than likely going to have a webinar, and they're going to explain the nuances of the offering. And in that explanation, they'll have a Q&A time so that you can ask any questions, like, hey, am I going to get a K1? Or how often are we going to have distributions? Or what's a projected timeline for, all of these CapEx projects? So those are the times that you can ask those questions. And then following a webinar is when they start receiving monies in general. So really, that's a process from deciding I'm investing and I know what kind of investor I am, to now I have an offering and I'm ready to wire money. I've sat through the webinar, and after that webinar, that's when you're making your final commitment. The next part, you really have to be sure to get your monies wired in. You don't want to delay. This isn't one of those situations where you want to say, oh, I'll just take care of that tomorrow, because you can get booted off that investor list because you don't have your money in and other people want in on the offering. So you want to ensure that. After the offering closes, guess what? You're just sitting back. Kind of feels like crickets a little bit, but a good operator is going to be sending you at least quarterly emails to let you know what's going on with the property, how the business plan's being executed, and any information about distributions or anything that's going to help you manage your taxes and such. So now you've been in the deal for the set period of time, oftentimes 3, 5, 7 years. And we call that, it's gone full cycle. And now it's being sold, disposed of, if you will. That's the common term for it. And this is when you get to exit the deal. This is when you're going to oftentimes have a little bit of a windfall come your way from the final distributions. There's so many different ways a business plan can be executed from point A to point B. I'm not going to get into that in this particular video because I want to try to keep it as short as possible. So there you go. What to do from I'm going to invest to, all right, I invested and the deal is now sold and I'm ready for the next opportunity. If you're feeling like you still have some questions and want further clarification on something, just head over to the 3 Keys Investments website and you can schedule a time on the calendar to meet with me, and I will answer any questions that you have.